Hello and welcome to Switzer Investing TV. I'm Peter Switzer and thanks for joining us. On today's program, I'm asking Mike Gable from Fairmont Equities, who's our charts expert, who looks at if the charts are saying buy or sell a stock, and Junbei Liu from Tribeca Alpha Plus, about a number of companies that the analysts really like. Now, I've written about this in the Switzer report, but I'm keen to see what these other experts think about these companies. Companies like ARB Corporation, Super Retail Group, IDP Education, Ordinate, all these sort of companies are really interesting and the companies that the analysts like. But I want to see whether there's more support outside what the analysts are saying. So let's kick off now with Mike Gable of Fairmont Equities. Thanks for joining us, mate.
Thanks, Peter.
Let's kick off, as we always do, look at the big indexes. What is Aussie market likely to do looking at this chart?
So the Aussie market still looks good. So as we've been talking about for a while, there was a major resistance level around 7,600. Breaking above that basically makes the market trending higher again. So it's
which you actually suggested. If that happened, it would happen.
Yeah, so it's still happening. What I've got here is a daily chart of the market. So just to have a look at what it might do a little bit more in the short term. So clearly we had that previous peak there, sort of start of April and the pullback. And as we mentioned, 5% pullback, that's fine. You know, markets need to pull back every now and then. So we have come back up to the old high. Ultimately, what we now need to see over the next few days is our market just to loiter around this sort of region here. And
building a base again.
Yeah, just consolidating under the old high, and that prepares it for the next move higher. So far, it looks like it is doing that. Yeah, if we start to get deep pullbacks, then we might need to spend a bit more time getting ready to head higher. But at the moment, everything looks fine. Market looks like it's preparing to make another move higher.
And ultimately, it's going to be the data drops. If the data drops say, like they did last week, that US inflation is coming down, unemployment in Australia is rising, these are the kind of data drops we want to see in ensuing weeks and months. Let's go to another one. And this time, rather than the S&P 500, you've gone for the Russell. And I'm really keen to see how the Russell's been doing because it's small cap. And when you get the second stage of a rally, it's often the small cap, isn't it?
Yeah, exactly. So we know that the major indices in the US are trending higher. They have been trending higher since 2022, but recall last year a lot of people were concerned about the US market because apparently it was all about the Magnificent Seven and the breadth of the rally wasn't that great. But we did have a look at this chart towards the end of last year, and what we noted at the time was I think it was around this point here, this is a weekly chart, where the Russell 2000 was sitting under this sort of major resistance level near 2000. So where the S&P 500 was trending higher during this period of time,
starting in late October,
the Russell 2000 was doing nothing. But it did look like it was close to breaking higher, and we did get the breakout, and it is trending. So for those who are still concerned that maybe markets aren't heading up, based on the majority of stocks, if they think the rally is still quite narrow, the Russell 2000, which is 2,000 small cap stocks, it does show that those stocks are trending now as well. So a nice broad rally in the US.
And that's why we have been talking about this part of the rally may be really good for small cap funds, and this is probably an early sign happening in the US. It'll happen here as well. Let's go to some Aussie stocks now, and I actually wrote this in the Switzer report, these stocks, and they're all stocks that are pretty good companies. Analysts like them, but they look like they've got some upside, but are the charts supporting it? First one is ARB, often called the blokes business because there's big bull bars on SUVs and whatever. Yeah, that does a lot more than that. What's this telling you?
So for this one, the chart's looking good. So we've got a situation where across sort of end of 2022, 2023, it was heading sideways, but we could see the lows getting higher and higher as it built up under this resistance level near, $34. It's broken higher. Very nice rally here. This pullback to me doesn't look very scary. It looks like a very corrective pullback. So what I mean by that is in this period of time, it managed to make up quite a bit of distance, 34 to 42.
Yep.
And then it looks like in 2 or 3 times the amount of time, it's only been able to pull back towards sort of 38. So the bulls are still in control of this one. It looks like it's taking a breather, and I think it's going to get ready for another move higher.
Okay. The next one we're looking at is an interesting one, because I know Paul Rickard and I think retail is going to struggle until we see interest rates coming down, or the market believes they're going to come down. But Super Retail Group, SUL, is kind of liked by the analysts. But is the chart vindicating their positivity?
Yes and no. So, I mean, in the short term, it has come back a bit. There's been a bit of news around management there as well. And look, it has pulled back, but a lot of retail stocks have also pulled back because there's been, I think, unwarranted concerns that rates might even head up from here, which I don't think is going to happen.
13 interest rate rises and more was the headline from some,
But longer term, so this is a monthly chart of SEL, we could see going all the way back to 2011. We could see that there was a major resistance level here.
That $13.20.
The mid-13s. So the breakout, which looks like end of last year, was quite, that's quite significant for it to get above a level that had been in place for so long. So it has come back towards that level. It's a little bit under that level, but this is a monthly chart. So looking longer term, possibly it's coming back to retest that level. So we may well see some good buying come in around here, and then that would be an opportunity for it to bounce back up.
So the jury's out, but looking reasonably positive. We're talking about Super Cheap Auto, Rebel. I thought myself, probably those $300 energy checks, a lot of people might use them to go to Rebel and buy a new pair of running shoes. And
they don't put it in the pokies.
Yeah, that's right. So that's an interesting one. Next one is Brambles, BXB. Not one of my kind of company, but the analysts do like it at the moment. But is the chart saying this is a screaming buy?
No, I'm a bit neutral on this one, and just purely in terms of how it's trading on the chart. So it's generally headed higher.
Nice rise there.
So this is a daily chart up until it gapped down. Quite a bit of selling here. Now the question is it levelling out to get ready for a move higher, or is it taking a bit of a breather only to break down again? We don't know yet. So. You've got the sharp pullback, the sideways movement, the range is tightening up. So this is a case where you draw a couple of lines here, so on the bottom part of this range, the top part. If it can break to the top, then that's an upside break, it's heading higher. Obviously, if it breaks to the downside, then that's your sell signal. So at the moment, we do have buying anywhere near 14.20 and selling anywhere near 14.60, but it's too early for me to gauge what the next move is.
It seems to me that if we believe interest rates are coming down and the global economy is going to be on the improve, of China, throwing $42 billion at its property sector on Friday, all these things should be good for a company that owns ship pallets and all those sorts of things. Global trade goes, it should be good, but it's a question mark at this point. It's not a real gimme stock, is it?
Yeah, that's right. And I think if the global economy is going to do well, which I think it would do, I think there'll be other stocks that are more leveraged to that than Brambles. So it'll improve,
okay,
but
it won't
there'll be other opportunities.
Now this is one that's really intrigues me. That's IEL, namely IDP Education, and like the analysts really love it. The market really doesn't love it. Is there anything in this chart saying that the market's getting it wrong?
Not yet.
No.
Not yet. So it's still in a downtrend. There's no indication to me that it's finding any sort of buying support. As we could see, every time it tries to head higher, it's met with selling. So look, it may well turn around here, and a few weeks later it's rallying. But at the moment, we're not seeing any buying support.
Yeah, it needs some kind of convincing market news that makes people think the market's been getting it wrong. But at this point in time, but as I say, the analysts really like it. And some really big numbers out there from analysts. Let's go to another one now, and this is Sonic Healthcare. Killed them during COVID, of course.
Yeah.
Struggled ever since. Are we seeing a bit of a comeback for this company?
Not yet.
No.
So similar to...
It looks like
similar to
IDP, doesn't it?
Just, you know,
It's going to be a matter of faith if you're prepared to believe the analysts on these two companies.
That's right. So still a downtrending stock, unfortunately. And you could see that, you know, there's been a number of occasions where you'd think, okay, it's been smashed, surely it can't get lower, and before you know it, it's, you know, another 20-30% lower. So, yeah, early days, I think there's other opportunities out there in the market.
The thing that intrigued me about this was I'm seeing so many people walking around the CBD with masks on, and we know there's all different sorts of flus around. COVID's coming back. Even the Federal Reserve, you know, Chairman Jerome Powell's got COVID at the moment. He's been locked up. And this is a company that would do well. The more we're infected by viruses, the more we go to. Is it Douglas Hanley Moyer is one of their pathology companies. So it's an interesting company, right on the coalface of all the problems with viruses. But yep, that chart's not saying ready to buy. Now, what about Audinate, AD8? Great company. Oh, we're going to go to Liontown first. Sorry, Liontown. Yep.
Yeah, so Liontown, I guess there's a couple of positives and negatives about this.
This is a lithium company, in case you don't know. Yep.
I mean, in terms of lithium, in terms of the major lithium stocks, to me they look like they've bottomed out.
Yeah.
So, you know, the lithium price, I think, bottomed out at the end of December. The share prices of some of the majors like PLS, IGO, LTM, to me they look like they bottomed. Mineral Resources has been on a fantastic run since the start of the year. I don't think many people have noticed that. The smaller ones will take a while, I think, until the market is confident that a low is in place for that sector. But having said that, the share price of LTR has done really well. So I mean, if you bought it at $1, if you were brave enough, then you'd have a decent return. So since the January lows, it's got a bit of a trend to it. It's trading okay. But if we just zoom out and think in terms of, has it broken the downtrend? And if we define a downtrend as you know, the lower highs and the lower lows, well, if we're looking at sort of these previous sort of lows and highs, it hasn't gone past this high yet. So it's getting close to it, which means as it gets closer to $1.65 or something, I think it'll start to encounter a bit of selling pressure.
Yep.
So I think at this point, you're looking at a stock that's already come a long way. It's getting close to an obvious sell zone. So let it get up here. Let's see what happens. If it can absorb the selling and breach this high, then I think you've got a safer entry point. Yeah. If you're holding it, you'd see if you could squeeze out another 10% and then maybe sell it up at this level. So getting close to that level, okay to hold, but I think too early to jump.
And we should make the point that Gina Reinhardt bought nearly 20% of the company around $3. So if Gina knows what she's talking about, one day she might get her money back, plus more. AD8, Audinate, great company. Killed them for a long time, and we've been on it. It's come off the bottom. The question I'm getting from a lot of our subscribers to the Switzer report is, well, is it time they give this business another go?
Potentially. So obviously up until here it was trending very well. We have these nice sideways consolidations, upside breaks, doing really well. I guess the uptrend pretty much ended around here as it started to take out the previous. You've got your highs and lows, broke that low. So around here was where it finished the uptrend and was going to struggle. So we could see it in a downtrend now. The positive, however, is where this blue line is we have a gap from February where it sort of gapped up there. And often, I don't know the exact reason why, but often you do see buying as a stock comes back to fill a gap. Just worth noting, we're getting close to that now. So you may see some buying support come in here, and if you get a decent amount of volume and a decent bounce, then maybe you end up with a buy signal pretty soon. So I wanted to keep an eye on, but too early to know because it is looking a bit ugly.
And being a tech company, I guess, that when we start seeing rates coming down, tech companies would be back in favour. But it's an interesting little chart, and as you can see, it's been a well-received company, but a few challenges right now. Let's go to Seek. Because Seek is a a job business, jobs-based business, and of course they're expecting unemployment to rise to kill inflation. That was the effective promise from the Treasurer. What's the chart saying?
It's a bit of a messy chart. So this is a weekly chart. I mean, since the lows in 2022, it has meandered higher, but it's been a very volatile ride. We're talking swings between sort of low 20s to high 20s and then back again. And it does look like there is a fairly well-defined channel that it is trading in. It's getting towards the lower end of that channel, so you'd be looking for some sort of decent bounce pretty soon to give you the buy signal. It's not happening yet. But I think down at these sorts of levels, it wouldn't be a sell. I mean, ideally you would have sold it up here if you were a trader, but I think around here is where you're going to start looking for some sort of evidence of buying support.
Now, it seems to me that SEEK's going to do better once the worst of the slowdown is behind us. And according to the Treasurer, 25 will grow in 2% and we're growing at 1.75% this year, if you can trust the Treasury's calculations. But it's an interesting one. It seems to be reasonably positive. I guess if you can get in at 22 or something like that, you're probably buying at the right level, because it's been a $36 stock not all that long ago. All right, now last one. This is your favourite, and you've tipped this quite some time ago. I'm sure you tipped it when it was around 2014, but it was a lot lower than it was today. So it looks good. The trend looks good to me, but you're the expert. What do you reckon?
Yeah, I've been getting questions about Paladin. Because
is it too late? That would be the question you're getting, wouldn't it?
Yeah, or is it time to sell? So we first spoke about it end of last year. And I think you were writing about it as well, and we also spoke about it earlier in the year. Around that sort of $10 mark, there's been a share consolidation. So it used to be $1, and they've consolidated 10 to 1. So around that $10 mark, it's now up in the 17s. So it looks like it's come a long way, and I guess in some respects it has. But when you look at the monthly chart, to me, it's only just beginning the move. So for those viewers who haven't seen me talk about Paladin before, this is a monthly chart going back 20 years. As soon as it broke that major base around $10, that was the start of the major move. So we could see, even with what it's done now, it's up about 70% since the start of the year. That's still a little blip compared to, I think, where it could still go. So there was a bit of talk about uranium at the start of the year, and that sort of died off. Everyone's now talking about copper and gold, which I'm still quite bullish on. But uranium, in terms of uranium stocks, have sort of fallen away from the front page, and I think that's an opportunity because they are creeping higher still, and I think any dip is a buying opportunity.
And political leaders around the world are becoming more realistic on how uranium has to be a part of the alternative energy system, because if you can't be guaranteed that your base load is going to be there, you're not going to stay in power for long if there are blackouts and things like that. So it'll be very interesting. Mate, thanks as always. Great coverage. That's Mike Gable from Fairmont Equities. And that was Mike Gable of Fairmont Equities. If you want to see the rest of the program, you're going to need to be a subscriber.